Well, folks, when there's no resistance in stocks, there's simply no resistance. Wild move in CRM, Okta, four tech stocks up over 10% on Wednesday. Foot Locker, going the opposite direction. Other earnings to cover, 8:35. A good old guest going to be returning to the show, Joel Kulina from Wedbush. Folks, we got a lot to cover. We're going to get it started right now on pre-market prep.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
All right, folks, let's get the charts up on the stage. Let's get going. Up 17 handles. Found a bid immediately. Trading an all-time high. Up 17 handles, 60.80 and a quarter. How's the buck doing? The buck is up 17 cents, hanging out near yesterday's high at 106.51. TLT finding resistance at 94, down 49 cents at 92.57. USO flat 73.06. Gold GLD basically flat 12 cents, 244.05. Silver going in the red here, struggling at 28. That's down 28 cents to 28 even. In Bitcoin, consolidation station here at the 97,000 level, up $555 at 97,090. I'm going to remove, I'm going to add Christian. Dennis is going to add himself. He's going to hop in here. And what a wild ride in CRM yesterday.
CRM, again, we see this happen. We'll give you the earnings here in a second, but we've been seeing so many instances where the algos get the initial move wrong. Yep. And they did it again. CRM, believe it or not, it's up 42 points here now. We're going to give you the numbers here, and then we're going to talk about the trade. Joel's going to get his charts up there and show you what happened on the initial number. But CRM coming out, 241 versus 244 looks like a flat-out miss, and then 9.44 billion versus 9.34 billion. So you're like, wow, this is a miss. So the algos read that, they're gone. Then, though, you got to wait for the guidance. A few minutes later, they raise the guidance, raise 25. We know, because we've been listening to pre-market prep for the better part of a decade here now. Actually, I think it's been 10 years. That guidance trumps earnings every single time. And when they raise the guidance, they see low end fiscal year 25 revenue up through 37.8 billion to 38 billion. That's up 8 to 9% year over year. They're going to rip it higher. But the initial move, and it's hard to even see on this chart, was down, Joel. You can see it right there. The initial move, blowing it up here a little bit bigger. There's a line. Yeah. No, you see the line? It went down.
Oh, the line.
The line. You're not lying. The lines don't lie. Anyways, initial move at 4 o'clock. Stock was trading down $10 on the initial spike. It was down there for about a minute. And then they started buying it, buying it, and buying it, and buying it. They could not stop it. I don't even see it on your chart, but it's there. It's there.
Here. It's right here.
What was the low?
Right 321.55.
So the stock went down $10. And so what happens, mechanics behind this is news algos here. You've got a book full of buys and a book full of sells. When they think it's bad, they just hit all the bids. All of a sudden, book is empty because you just cleaned it out. The algo just cleaned it out. So if there's not follow through, they're screwed. If they read something wrong, they're screwed. In this case, they're screwed because there's no follow through. Guidance is getting raised here basically in the next sentence. And bang, 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 they're trying to cover into nothing, and then it's there. And if there's a risk management thing in it, then it's probably the algo that's even selling it is probably scrambling to try to buy it back because they're screwed. So anyways, earnings reversal here once again, down 10. Now it's up 42, up 12%. It's a huge winner driving all the indices higher. QQQ obviously trading higher on this. We've got XLK trading significantly higher on this. We've got SPY up. It's CRM. Don't kid yourself. CRM's a driver here for everything today because that really kickstarted the tech rally. Christian Fromhertz, you trade in this action?
I do not, unfortunately. I wish I had. I mean, I look at Salesforce, historically how it moves on earnings, and it doesn't do these types of things. I mean, it does. We do sometimes see a reversal. Sometimes Salesforce starts off lower, like it began, and this is of course in the first 5 minutes, which is that move is just crazy. But sometimes Salesforce starts lower, like after the after the initial reaction, and then Benioff comes on and
Yeah.
talks it up in the conference call, or he goes on Kramer's show and gets the stock to reverse. So I was expecting something like that, and also just noting how it previously moves, because you don't have too many quarters for Salesforce where it moves up but this much. I mean, if you look at I think the last time it moved up over 10% was in the beginning of 2023. Every other quarter is kind of like, there was one real bad miss where it went down 20%. That was 2 quarters ago. And then, there's a lot of like small moves to the upside. So this is shocking to me that it just continued to run and is up like 12% pre-market. And to your point, it is already juicing. Like the software group has been absolutely on fire. So you mentioned XLK and, the overall market, but man, these software results for small companies and large companies are crushing it.
What did Benioff say? Didn't he say something like the word, I'm trying to find the exact quote, but like they were like just doing incredible, and this is like the world is changing, and it,
Right.
did
Does
you catch
anybody talk their stock up more than
that?
Benioff? He
don't know.
might talk it up more than Musk talks up Tesla. He is a promoter.
Yeah.
He is a salesman. That guy could sell anything to anyone. He
puts
gets
the
on
sales
Mad
in
Money. He is
Salesforce.
so well spoken. He is the premium. There's a reason the company's called Salesforce, because Benioff behind it, that guy is sales. He can sell you anything. Anything. The only person that might have been better at selling than Benioff was this guy. I won't call him all out, but it was the Quiznos when I bought the original Quiznos. It was Dan. I won't say his last name because I don't want to get him in any trouble or anything, but it was Dan from Quiznos. And I went to, when I originally did the Quiznos story, and you guys know I had this subshop, it was 2002. I was like
This is an oldie.
diversifying. You know the Quiznos story to a certain extent if people listen to the show. But anyways, I had a Quiznos sub shop. So I was living in Windsor at the time, and I go to this show with my future partner who was managing Subway, Tommy. And we go to the show, and they got the whole thing set up really cool and everything, for like trying to sell franchises. They have like an actual store they've built in this, auditorium here. So anyways, I go after the show. I was like, has anybody, bought Windsor yet? He's like, Windsor, yeah. He's like, shh. He's like, Windsor, we can do that. It's like so good. You think like, and then he comes down, and like, I buy the store and that, just like, just unbelievable with the sales. Like he makes you feel like you're just gonna be king of the world here. Like I show him the site, and the guy goes, this is a PG show, but this is what he says. He's like, I'm like, this is the site we're envisioning. He's like, I'm like, do you like it? He's like, I tell you, I got a hard on right now. That's what he says. I'm like, this is a PG show, kind of. But I mean, this guy could just sell. He reads you so well. Like we're like 23-year-old kids. He's saying everything you want to hear. He could sell. Benioff is probably better than this guy. He is the best salesman in the whole world, which is why he created Salesforce.com. This guy sells. He talks better than anyone I've ever seen. But it's almost to a point where I don't even know if I can believe him because he's just so good at selling. But anyways, he sells the stock. He's on Jim Cramer. He says, company's the best company in the world, CRM. Company's making new all-time highs. How do you argue with performance?
What was expected move?
7.4%. So it's kicking above that.
Yeah, no, I was just thinking on the knee-jerk reaction how much it went down, but I don't have that calculation real quick. Dennis, also that guy that was on during COVID, the storage tanker guy from NAT. Remember him?
Yeah, but here's what's funny. He's like, we're raking it in, man. We're raking it in. I've never heard a CEO of a public company say, we're raking it in. NAT, where's that stock? NAT is not Salesforce. $2.75.
No, it's not.
They
Pre-market high.
They raked it in for about a day.
pre-market high 378.45, folks. We've leaked $6 off it. I would just keep an eye on that number. If we blast through that and go like the 380, whatever the pre-market high, use that as potential resistance. And then if you get up above that, whatever the pre-market high is, and you come back down through it, watch out. There's going to be some moves on both sides. But that's really the huge gap here, way above the all-time high. That's really the only technicals I could give you. Let's move on. Still in technology, Marvell, MRVL. I'll give you the numbers. I know, Christian, you sold some before the number. They beat 43 versus 41. Beat on sales 1.52 versus 1.46. Bumped up guidance, both sales and revenues. I mean, Marvell blasting off here, up 12.14.
Big move. Wow. I don't know what to say on this one here, too. I knew all-time highs. Remember one thing about these stocks, they're very cyclical. Marvell is cyclical as well. I mean, we were throwing it out. Everybody was throwing it out in September. The stock got down to 53, so you now have got it double. So, I mean, if you're coming in now after all this move, you've got to look at the long-term chart on Marvell. It goes up, it goes down. It goes up, it goes down. It goes up, it goes down. This goes up. I'm not going to bet it just continues to go up forever. I mean, seasonality working in its favor. Yes, it's making new all-time highs. But at this point in time, I'm going to say I've missed the trade, not chasing Marvell.
Well, what's interesting here too is I didn't realize until I was kind of looking at both these companies yesterday prior to earnings is that Salesforce is now at all time, as Joel just mentioned, is that there's no resistance at all time highs. So is Marvell, and it's been a while since these companies. I think you're going back to on your chart that you've got there.
Right here,
yeah. What's the date that you have for the highs? Is that December?
This late 21, December of 21, 93.85.
2021, and we've talked about kind of this theme where there's a lot of companies now that are getting over finally those previous year's highs, and it's been a while for Marvell. What I found very interesting too is just the overall group of the semis, which have kind of been, as of until the last couple days, basically this week, the semis have been the dogs in the tech space recently. They really haven't done much. It's been so much more about software recently, but now all of a sudden with some results coming in like this, I'm getting much more positive about the group, because it's still like you're looking at, if you look at the SMH ETF, the highs were made back I know this is a long time ago, but all the way back in the middle of July. I'm being a little bit sarcastic, but I think that this is kind of your next group to kind of rev back up again and maybe start to possibly test those July highs. So, and if you go through some of these names, you're also seeing some of like the option flow start to attack again. Like Nvidia, there was a lot of option flow. Qualcomm, that's been a really tough stock, but there's been some option activity there. Broadcom, I'm looking ahead, and I got long Broadcom AVGO, and that name reports on the 12th. And I think that has the possibility to kind of to have good earnings, because again, that's another chart where it's been consolidating over the last few months too. So I like this, as you can tell, I like the space because it is not extended like you're seeing a lot of the smaller growth technology names are.
Do we care about ADP here?
Yeah, we do. So ADP numbers coming up here. I don't know if you have the preview in front of you here, Christian. AB is usually pretty good at this, but AB is off here today. We'll just say 30 seconds here. I'm going wide because I'm not taking any chances. I know how this stuff sometimes works.
Okay.
150 is what they're with the survey expected number is 150K.
Okay, 150K here. The super smart fast algos are getting it right now, and we're gonna get
that's super. So I don't know if they're getting those right now, but
20
seconds. Here we go. ADP coming out here right now.
Survey says
wide. S&P went 12 cents wide. IWM's 10 cents wide. Waiting for the number to pop into our screen.
It's 146. 146.
It's almost in line. This is a nothing burger, folks. Put your orders back out there. Nothing burger. Going narrow.
Okay. All right. Forget the 1 minute. Let's forget about the 1 minute. How about let's go to Okta, right? I mean, if we're talking about, big stocks making big moves, Okta reporting after the close, and I think that stock is just blasting off again. Here you go. A beat 58, adjusted 67, beat 58. Don't make a ton of money, but 665 versus 649, like that. Guidance they liked, adjusted Q4, adjusted Q fiscal year 2025. Beating a raise. I wonder what that stock's doing. Okta, did it give you any kind of dip? Probably not with those kind of headline numbers.
And again, this is a stock that is a little bit of a different story where you've got, 2021
Ooh.
darling up at $280, $294 a share. And then through 2022, stock losing, 85% of its value, bottoming down at 44. So it's been trying to come back here over the last 2 years, but has definitely been a laggard. Think about, other cybersecurity stocks, with Palo Alto just continuing to break out, CrowdStrike's bouncing back, very quickly. Zscaler, is trying a little bit more of the same story where it's never got back to those 2021 highs. This is a stock still 65%, 60% off its all-time highs. So there's room here. Not saying I'm chasing it here, but this has been a beaten down darling. We know these stocks have come back into favor over the course of the last, month, where they're looking not so much at, mega caps and not so much, at still, they're just moving out, broadening out. And stocks that haven't participated, tech stocks especially, that haven't participated in over the last couple of years are really starting to participate in the last, month or two. So Okta fits that bill, which makes me probably not want to fade it.
Yeah, what's funny is in yesterday's show, I was dogging the cyber companies. So I hope you can, the chat can kind of use us to fade our opinions, because I was really down on cyber names yesterday. I was like, I don't like the reaction in CrowdStrike and Palo Alto, and I think there was another one too that reported recently, and I just said, I don't like this group, and and I know Dennis talks about that sometimes too, where it's, if you have a couple names in a group that go down or just aren't acting well in the group, it sets the bar pretty low, because I wasn't even, Zscaler, thank you very much, was the third one. So it set the bar low for Okta, and sometimes that's when you've got to move like this.
Well, a little different pre-market chart here, because you went all the way to $99. 99 on that initial surge. And now cooler heads are prevailing. We're trading at the $93 level. In all honesty, if I had this stock and I was long it, I would have had an offer out at 96.26, because that was the gap fill. Or yeah, was that the gap fill? No, actually the gap fill was at 95.36, and the high that day was 98.26. So that was gravy. I mean, I don't know if you're going to get back up there. I don't know if it's a great idea to short it, but just the way it's come off, I think even sellers right now have come down to 96. So this looks a little bit different than the CRM, which is kind of holding a 372 bid, $4 or $5 off that pre-market high. Do we want to stick?
I want to stick with just taking you a little bit further, because when we have a chance to teach something, I want to teach something. I'm using the Joel Elconin level theory, and you did it really well, Joel. I mean, you look at July, double top at 100. Like, I'm just looking, cherry picking, just a couple of levels here for you. But I mean, you can see so much, action, back, and then August, same thing. We put multiple tops in just under $100. So when you have something and you have like this wall of resistance, and I mean like a 10-star level, like 100, when you're coming from 81 and you're way outside the outside move and you throw a ball against the wall, it usually bounces back a bit. And that's what we're seeing. Okta threw the ball against the 100 wall, $99, call it, and it bounced back to 92. If you keep throwing the ball at the wall, eventually you can break the wall. But when you got that initial throw, the first throw usually doesn't break it. So there's a trading strategy for you right there. When you see that wall of resistance at $100, and you see just flying, you think, oh, it's going so fast, going to take it right out. It usually doesn't, because it's the first throw. Usually takes a few throws, get through it. There's probably institutions lining up there. It's a big psychological level. There'll be optionality at that price. So many reasons why it probably doesn't go through it on the first time. Now, if it gets up there again today, maybe you can start to punch through it here again, but you're already 8 points off it. So now it looks like that's pretty big resistance there. So even if it gets up there again, I'm like, it's going to go on the second time. I'd probably be more inclined to short that area, that 98 to 99. So great level, Joel. $100. Sometimes just simplistic, simple. Keep it simple. Look at the levels, talk the numbers, big psychological level, lots of other highs at that area. Probably going to be major resistance.
Do we want to keep on the happy train here with Pure
Yes,
Storage?
happiness.
Do one more.
Okay, before we go to the pain trade? Okay.
We know where the pain trade is.
Yep,
It's in
yep.
retail, folks.
Oh, what a shocker.
What a shocker.
Pure Storage here. They reported after the close 50 cents versus 42. Sales beat 831 versus 818. Bumping up guidance for Q4 and fiscal year 25. Beat and raise. Survey says a big rally. I'll do my quick technicals on this one. Leaked off the pre-market high of 69.10. Oh, this is right near all-time highs, folks. I'll give you a level all the way up to 70.41. I mean, if that's your target, if that's what you've been waiting for since earlier in the year, you might get a shot at it today. The longer it takes to reach that level, you might get a little bit of a fade.
I'm taking a pass. He did such a good job. It was just perfect, Joel.
All right, I'll add. So first of all, I like the analysis, the technical analysis that was just mentioned, and I think of things too as like the path of least resistance too. And when you've got all that overhead supply, going back to Okta, I completely agree with that assessment. This one, this is actually your biggest mover out of the tech companies that we mentioned this morning. It's up 22%. I'm actually looking at another company which has been very quiet in this group, and that's NTAP. NTAP.
Oh, yeah.
Oh, good old NTAP.
Yeah, so like this one, and the chat can correct me if I'm wrong, but they're kind of a little bit similar businesses. But this name has been so quiet for a while. This had such a nice move, and it's just been kind of consolidating over the last 3 or 4 months. If you haven't figured this out yet, I love consolidation and uptrends. I love when things kind of go, have a really nice trend, and then they kind of just sit and digest for 3 or 4 months, and they're sometimes waiting for like a new catalyst. So I've got this one on my radar, maybe more of a longer term holding than just like a quick swing trade. But I like this NTAP on the back of Pure Storage.
Wow.
I just want to say it's a great, thing to look at is just talking consolidation at stocks that are near their 52-week highs. So consolidation in uptrends, consolidation in stocks near 52-week highs. I mean, you go out the long-term chart of NetApp, there is absolutely no doubt that this is in an uptrend. It's sitting here consolidating now for the better part of 3 months, really between 115 and 135. Consolidation near highs usually equal eventually another breakout. So write that down too. 2 good trading strategies. Look for those major resistance points, but also consolidation near highs. That's kind of stuff that I like too, Christian. And this is obviously your bread and butter as a momentum trader. I mean, setups here. So this could be, and then seasonality, working in our favor here too. We're in December. People are hunting stocks. They're all excited about Santa Claus coming to town here in a couple of weeks. I mean, this just, start looking for charts like this, to be honest with you. I like the setup here too.
Okay. From the good to the bad, real bad. Algo's getting this one right. Reading that initial report, 33 cents versus 41. Revenues miss about 1.96 billion versus 2.01 billion. Foot Locker expects 2024 sales to decline between 1 and 1.5%. They are lowering guidance. Foot Locker, I might as well throw it out there, getting stomped in the pre-market. Dennis, Algos get this one right.
Yeah, they did. Who got it wrong was people who were buying this ahead of the print last night. This was just relentlessly trading higher last night. I'm like, do they know something? I'm like, Foot Locker, it was 24.80s, 24.90s. On IB after hours, it was 25.50 for size. Like, people were paying up $1.20, $1.30. They were really convinced that this was going to be the turnaround quarter for Foot Locker. Well, whoever was really convinced was very, very, very wrong, because the stock obviously disappointed. They missed. It tanked, and it's bringing Nike along with it. I did get a good trade off on Nike off of this. Stock trading down now, Nike 2.31%. But this goes to show the story of the market. To Christian's point here, you have stocks that are in uptrends. They seem to, be obviously better buys with those uptrends continues. And then you have Foot Locker and Nike, which are in relentless downtrends. Foot Locker, $60 in 2021, $60 in 2019. Here we are 5 years later after one of the best bull markets we've seen in a long time. And the stock's down 55 or 60% now from the highs. Nike, same story. 2021, high $179. It's $77 here this morning. It's off 55 or 60% from the highs as well, in a bull market that's just been relentless here. So if your stock's going straight down in bull markets, you are in the wrong stocks, folks.
Okay.
Yeah, I was just going to add real quick with this. It's kind of, this makes this name and this group kind of tough, because they were talking about their like back to school sales were lighter, and like you don't know if it's just Foot Locker and people aren't going to Foot Locker, or if it's the whole group. So it kind of makes the group a little bit difficult to analyze when you have something like this.
A Foot Locker has been a dying breed for a very long time, and we've had some pops, and it's coming back. Oh yes, everybody's going to the mall, and we went from 15 to 35. Eventually, when the dust settles, no, they're not going back to the malls. The same thing with Kohl's. We looked at Kohl's and we're like, oh yeah, here's the stock that's went from, back in 2023, we got down to a low of 17, then we went all the way up to 28 and 29. Everybody's like, Kohl's is back. Well, no, it's not. This was what you call a bear market rally, where you just got the stock in a relentlessly downtrend, and it's getting a bounce, it's getting a lift, because stocks don't go straight down. The trend is your friend, folks. I'm not talking about your tick charts. I'm talking about your long-term charts. And sometimes it's good to bring out a 5-year chart. You don't know the stock. What's it done for the last 5 years? When you see it going down for the last 5 years, that's a downtrend, folks, and that's a heavy downtrend. And what you have above you is bag holders all over the place. Please give me my money back. Heaven forbid I take a loss. Please give me my money back. Of course, they don't want to sell at a loss. This just goes right back to behavioral finance called loss aversion, and people don't like selling at losses. So when you have all these people for the last decade buying Kohl's and buying Nike and buying Foot Locker, they're all down. They're all willing sellers. When you have a stock making a new high, there's not a lot of willing sellers. So this is the difference. This is why Christian is as good a trader as he is, because when the hell are you going to be looking at buying Foot Locker, Christian? Honestly. We can learn a lot from you right here, because I'm throwing you the softball up the middle. Where are you buying Foot Locker?
Probably.
Yeah, Christian.
I'm looking at that as probably as often as I'm looking at stepping foot in one of their stores. I don't know when I've been in a Foot Locker. I've
Not
passed
even
by
thinking
it.
about it.
I've passed by it sometimes when you're in the mall, and it doesn't even like, is anybody in there? Oh, maybe there's two people. No, I stay away from downtrends, and this is a pass for me.
Does the Dick's
exactly.
reaction give you any like looking at the Dick's chart with what they did off its earnings? I know Dick's is much more diversified, but was that a little bit of a warning shot, or just
Not really? Dick's is such a different business. They got the one little corner percent of their store sell some shoes. They sell everything outdoors, everything people like doing stuff. What turned Dick's around was COVID. What turned Dick's around was COVID. And there's certain COVID stocks, not the vaccine makers, but there's certain ones that kept that momentum going. Because you know why? People started realizing, I like doing this outdoor stuff again. You got people hooked on going out and doing stuff and buying a tent and going camping, or, going outdoors and doing stuff here. That's what turned Dick's around, So there's certain stores that actually did, keep their momentum afterwards, and Dick's is one of them. But, Dick's is trading down definitely on Foot Locker this morning. They do sell some shoes. So obviously, that's a little pocket. But I don't suspect this is one that's just going to collapse here. But, it's came a long ways.
All right, let's bang out one more earnings report before we get to our special guest here. Chewy trading in the red here. Not a bad, well, a mixed report. They beat on EPS, 20 cents versus 8 cents, but they missed on revenue, 288 versus 290 billion. Let's see, sales, kind of, a little bit above of guidance on Q24 sales. Mixed report, had a nice run. Boy, they hit it and they bought the dip. What do you say about Chewy?
Are you guys going to have Roaring Kitty on anytime soon? Is that somebody who you
We
can?
should get him. Let's see. Let's reach out.
Okay.
We'll have Josh reach out to Roaring Kitty, see if we can get him on. That would be good. No, I don't think we're gonna have Roaring Kitty on anytime soon. I didn't care for that last podcast when he came out with the cast and everything, and then didn't speak and drank a beer, and I'm like, I didn't really get it at all. And I think Chris Camillo summed it up really well. He's like, he said it was GameStop was like $35. He's like, he tweeted out, he's like, I sold all my GameStop. And it's self-explanatory if you're watching this video. It was absolutely a train wreck. And the stock went down significantly after that. We know Ryan Cohen's in GameStop. You know, I've been trading GameStop a little bit. It's fun to trade. I've actually got a position in GameStop. I just get in and out of it. I day trade it all the time. It's fun to trade. And Chewy, same story. But Chewy is a real business. Like, not that GameStop isn't a real business. Maybe it's one day going to become a real business. But, you know, it's the hope. You know, GameStop is basically all of a sudden become like a SPAC. Like, they just keep raising money. They have all this cash, like $12 in cash or something, or $13 in cash. And you're expecting Ryan Cohen to come out and really tell us something one day. I think that may happen. Maybe it's maybe it's going to be something. They're working on something there. But Chewy, I mean, that's a business that you can actually say, you know, it's fundamentals here that we can analyze. We can look at balance sheets. We can look at all the fun stuff. And the stock has a good story to it, too. It's been coming back. Do you still buy your dog food there, Joel? Chewy?
With the new dog, we get packages every day. Lisa
From
sends
Chewy?
me to yeah, Chewy. She sends me to Petco. I mean, this is a real finicky dog. So I would say I'm a diversified buyer here. They bought the dip though, pre-market low.
What's the new dog's name? What's the new dog's name?
BB. BEBE.
Nice.
Yeah. She's a rascal. I'll bring her on. I can't today because I'm like running everything, but she is a rascal. That's all I have to say. We had the dip. We hit $33. I'll just give you that as like some mild 15-minute resistance. You know, if you want them to like this report, let's see if we can get back up to this. Really, it's a quad close area at 33.40. So that, you know, if they really like this report, boom, I say you get up to 33.40 and you close above it. Christian, any comments on Chewy?
Pass. Next.
Pass. Okay. So it's been quite a long time since we've had this guest on the show. And, you know, it's Wednesday with Wedbush, and up there with Michael Pachter and all the great other analysts there, there's Joel Kulina. And he's a guy, he covers technology, media, and tech, media, and technology, I think. Do I get that right? Is that repeating it? Anyways, with no further ado.
That's like dodgeball, Joel. You dodge, dive, duck, and dodge. We cover technology, media, and technology. Did I repeat myself? That's a senior moment, folks. Yes, he's in his 80s now. Give him a break. That's a senior moment.
Tech, media, and telecom, Dennis. And you can start doing the guest scheduling and running the show.
I wouldn't be able to make fun of you.
Okay, Joel, I really messed that one up. Can you?
No, not bad at all.
He'll give you a pass because Joel's a nice guy.
And he came in early and everything. He's listening to Dennis's Quiznos story. Yeah. I mean, but anyways, Joel, we're glad to have you back here on the pre-market prep show.
Yeah.
What a crazy market, huh? Where would you like, of your three areas that you cover, where would you like to start?
Yeah, I mean, obviously tech is still where all the excitement is, enthusiasm, especially heading into not just looking at performance from 2024, but heading into the new calendar year. Tech is where it's at. You know, we all can talk. I think you guys kind of touched on it in a different way. This market's it's pretty divided. You have your winners and your losers. And the reality is, like, for the most part, media, outside of a few idiosyncratic, really unique assets like Netflix, Spotify, Live Nation, the rest of them are just kind of legacy old media, has kind of been dead money. And tech is sort of in the same bucket, but tech is where the focus is at. And here we are this morning, another flurry of great tech prints last night. And, I think Dennis touched on it too, like Salesforce, or sorry, I think Christian did, like Salesforce. The T plus moves we're continuing to see, post earnings is just incredible. There's a lengthening list of double digit moves is becoming the new norm. And I don't know if that's a function of positioning, crowding, whatever it may be, but it's pretty phenomenal, right? Pure Storage is up 22%. Marvell's up 13%, Salesforce up 12%. On the flip side, Base is down 10%. So this is just something tech investors are becoming a little bit more, or having to become more comfortable and just used to. But I think tech, let's start at the top. I mean, Salesforce, they clearly massively beat, not just their numbers, but they beat buy-side bogeys as well. And you guys, again, touched on it earlier. Benioff is an ultimate salesman, and he just sounded fantastic on the call. Agent force momentum. They signed over 200 deals. He's talking about thousands of deals in the pipeline. And this is where you want to be. In conversations I've had with my clients, especially within large cap software, the charts are very reflective of this, and they align with fundamentals. You want to be in Salesforce, Oracle, who reports next week, in ServiceNow. And on the other side of that trade's been Adobe and Microsoft, which obviously Copilot checks have been very choppy. Microsoft, really the biggest issue on the story has been the lack of upward estimate revisions. And then Adobe's sort of just been chopping around, and it's sort of, AI really hasn't there's no sign of AI, being monetized yet by them as well. So here you have Salesforce, Oracle, ServiceNow versus, Microsoft, Adobe. But to me, software this year has been the number one story. Talking to a lot of, longtime software investors, 23 was a brutal year. And now in the past, say 4 or 5 weeks, we have better than feared results overall. You have rates relief, limited perceived policy headwinds, especially for the small and medium, businesses, i.e. no tariffs. There's no China, overhang on these names. And then just kind of continued optimism that AI moves up the stack into 25. And that's sort of what Salesforce reinforced last night. I know my good friend Dan Ives here, Mr. AI, he's been talking about that for a while. And then you get all these tailwinds together, and then what does that lead to? Increasing FOMO. So I think,
I just want to talk about one thing that we really try and concentrate on this show is continued constant rotation in this market, right?
Yep.
So the money that is going into the software is coming out of somewhere, and it's coming out of the semis.
Yeah.
Now, is it the non-AI demand that remains? I mean, AI, which is not monetizing yet. What is it? What's going to kickstart the semis? Do you think you're going to continue to see this wicked rotation?
I think the rotation has legs. As simple as non-AI demand, just put it simply, it's just terrible. It stinks. Look at the automotive industrial data points remain pretty grim, to say the least. Smartphone demands just kind of lackluster. Even the iPhone cycle, right? Apple's obviously a very unique, story, but the cycle just continues to lengthen out. There's really just no sexiness. And even look at NVIDIA, right? NVIDIA's sort of struggled at 150. It's faded right back down. Names like Arista Networks kind of gapped higher post earnings, then faded. Qualcomm had that I think it popped 10% when they reported. That's come right back in. So there's just no follow through incremental demand from the global investor base to own these stocks. And I think it has to do with just, really, semis, I think, outperformed software by 26% January through May. And then you had a little bit of stabilization in the summer. But coming into Q4, people were pretty underweight software. They were waiting for that final cut. So, typically this tail of demand has been a lot longer than people expected. But that tends to what happened in these trades. Again, whether it's crowding, extreme pessimism at times, and then you get this kind of rotation that just lasts a lot longer than kind of anyone expected.
Joel, the chat wants NVIDIA, and we haven't talked on actually for a few days here on the show. It's interesting here because, you've seen this substantial rally in a lot of tech names, so really over the course of the last month and a half, NVIDIA's kind of just treading water. We're 140, 142. That's where we were a month and a half ago. We were 130 3 months ago. It's not moving up as much as some of the other names here. Is this just buyer exhaustion in the name? Does this eventually catch another bid? What are your thoughts on NVIDIA?
I think near term, it's probably just chops around a little bit. Like there's no really catalyst in the near term that's going to get that stock to break out above 150, unless obviously the market we go parabolic and liquidity kind of evaporates and we just see a huge move in the back half of December. But there's just really no catalyst path. The stock really didn't react, post earnings. It again just continues to chop around, and that really just more reflective of people are there on the institutional front. And although positioning and sentiment is off its highs, we are seeing a support from the long only community. But with that said, as this AI narrative broadens out, again, look at ServiceNow and Salesforce and Marvell. Like, people are just looking to put their dollars in other names that haven't had this type of hockey stick move. And it's probably that simple. And so for me, in my conversations, the biggest investor debates for NVIDIA have been, what is the upside beyond a $150 framework, trajectory of gross margins, visibility into 26 and beyond. And there has been some noise as well of order cuts out of the supply chain, regarding the Blackwell ramp and the fact that the stock just can't really rally on positive data points. I think it's just very telling, right? Here's a story in a stock in 23 and in the better part of 24. If Jensen got on stage dressed in leather, the stock was going to go up 5% regardless. And you're just not seeing that. So I think the next catalyst I look for NVIDIA, Jensen's given the keynote January 6th at Consumer Electronics Show. Then you obviously have the earnings in late February. And then GTC is March 17th through the 20th, I believe. So there is a catalyst path, but investors increasingly are becoming so near-term focused. There's just really nothing to get too excited about in NVIDIA in the near term.
Hey, Joel, great to have you on the show. And, you mentioned about the software space, and it's something that we've been talking about too, is, how these names have just been running. A couple names just, AppLovin is one of those names that is just has been unbelievable in terms of the momentum. And I'm a momentum trader. I love when there's continuation, but I've got a couple questions for you. Why do you think that we're getting some of these moves where they just continue? Do you think that institutions are under positioned in some of the smaller names? And then the second part of the question too, because I'm a momentum trader and I'm looking at more than technicals, but I don't want to ignore fundamentals too. At some point, do the fundamentals get like crazy when, like price to sales ratios and things like that?
We're not quite at peak COVID levels where it seemed like there was probably 50 companies trading, north of 50 times sales, but I think Palantir is right around that area now, right? They're at least 45 or 50 times sales. So you mentioned AppLovin. Palantir, Reddit falls in that camp as well. And these stocks were very underowned by the institutional investor base. And
Sorry. Okay. If you wanted to continue there too, but I have one more name too to mention to you too, which is Snowflake had really good earnings. They haven't really, look from a technical standpoint, they were kind of, maybe underperforming a little bit. I mean, I think this is a candidate for maybe upside continuation. Do you have any viewpoint on this one?
No, I agree with you there. Snowflake's it's trading higher in the pre-market. I think it's up 3-4% in the pre on the back of the Salesforce print. And I think it goes higher. Again, and then there's some key prints coming in the next few days as well. Really next week, right? You have Oracle, Adobe, but we have, DocuSign, GitLab, SentinelOne. I see these stocks going higher. Snowflake's breaking out of its range today. And I think you want to be buying the breakouts in the group versus catching falling knives in the semi space. I just don't see what's going to shift the narrative with chips being so hated outside of a select number of AI winners. But that's where the global tech dollars are floating to, and especially the generalist money is floating into software. Guys that typically what happens. Generalists are late to the move. Guys we're kind of scared about. Look at Snowflake. Like up until a few weeks ago, stock was just 120, doing absolutely nothing, and then you get this sort of this hockey stick ramp up, and I think the trend is higher in these names. At least into the next earnings cycle. So I think you could be buying these names with a 1 to 2, 3 month horizon, and you're not going to get killed. And either way, if the market falls apart, I still would expect the shorts are going to press in the payments, semis, more the more hated pockets of the market. But regarding momentum, you mentioned AppLovin. So there's also a big S&P announcement coming on Friday, 5:15. AppLovin's at the top of that list. So you're definitely seeing some pre-trading into that event. I know not Palantir, sorry, they were already added. Coinbase is on that list. Workday's been on that list forever.
Forever. Is it Workday's time? Is this their time finally?
Well, it showed a little bit of a pulse yesterday. So, I mean, I think it could be an interesting for a trade. I don't think I'd hang around for on Friday at 5:15.
Could Palantir go as well?
Palantir's already in.
Yeah, I was thinking about that too. Yep.
But Trade Desk is on that list. That's another growth momentum name that's in those kind of factor baskets. But yeah, like yesterday was just a classic tech pro growth momentum tape, and you're seeing these names just continue to rip to the upside. But this isn't just covering. This is real institutional support. Again, guys who've just been super late to the stories, and whether or not they need to show them, owning some of these names on their books come the year end, whatever it may be. But it feels like at least for the balance of this year, you want to be long the growth momentum names that have gotten your performance to where it is.
Speaking of Palantir, you mentioned it a minute ago here. At what point? I mean, this stock has been unbelievable. It's up 1,000% this year.
Yeah.
At what point does valuation actually start to matter? Because I've always said when the story is hot, valuation doesn't matter at all. But when you're in rocket ship mode and you're trading 60 times sales, is there a point in time where valuation actually matters? I guess that matters when the rug pull happens. Everybody's like, oh, why am I trading 60 times sales? Like, I mean, this has just been an unbelievable, obviously one of the best stocks of the year here. April, $7. Now it's 70. Thoughts here on Palantir trading 60 times, not 60 times earnings, 60 times sales. Yeah,
it's funny. I was in New York a couple of weeks ago. We've seen a lot of good activity in the same on this desk here, and there was real demand around the $60 level, and then you pick up your head and like holy crap, this thing's that's knocking on 71. So at some point it's not sustainable. But it is a pretty unique story. And I think if you get a pullback to 60, non-fundamentally driven pullback, whether it's market, rotation, I think that's when you want to accumulate. If you see Palantir's trading down 15% on a fundamental catalyst, I would not be buying the dip. Because there is a lot of, I won't say dumb money, but a lot of guys have been chasing this late in the story. And those will be the generals will be the first people to be puking it as well. And again, that tail of supply can always be a lot longer than you think. But if it's trading down on a fundamental catalyst, for whatever reason. But you also know they're a friend of the Trump administration, so they're going to have that tailwind as well. Heading into 2025 in the coming years.
Just a quick technical note on NVIDIA for our NVIDIA traders here. You blew out the shorts on that earnings day, and then you did check back to 131.5. Boy, but just look at this 142 area, 142, 30s to 50% retracement. You have a daily high here. You're trading right there right now. So I think if the bulls are going to reestablish control here, they're going to get a 142 bid. So that's your one number for NVIDIA. The last stock, or unless Dennis or Christian have something else.
Yeah.
Intel. Now I know Dennis had it long, just a day trade, and also we both have this pig in our portfolio, and it got that pop.
Call it what it is.
And when I see those kind of pop, I don't keep my long-term portfolio open, to get out of stuff. But I'm thinking, like, all right, they got rid of this guy. Like, oh, so that's good news? You're going to jack the stock up $1.50?
5%.
Bad news. So is there any hope for Intel?
With the information we know now, no. I
love this summing it up.
I was fortunate enough to be based in London in 2000 when the iPhone launched 17 years ago, and I covered a little company called ARM Holdings, right? Obviously SoftBank bought them. Yeah. They've relisted, but I mean Intel got absolutely destroyed in the mobile wars, right? ARM's wireless chips powered every mobile device that came out, especially Apple devices. And Intel, regardless of who's at the helm, they just seem to miss every secular trend that comes across. They relate to data center. They've completely missed AI. And so I think, I think the pop was maybe Gelsinger, couldn't find a buyer for the company, but I think cooler heads prevailed. We saw the stock reverse hard during as the session was at 2 days ago, I believe, and then obviously yesterday it lagged again. And now it's just there's just a lot of uncertainty, and there's just I kind of mentioned legacy media names at the top of it, and non-AI semis. There's just no patience in this market for any sort of turnaround stories, especially where the recoveries are L-shaped at best, and there's just no light at the end of the tunnel. So, I mean, yeah, maybe $20 is obviously a big level of support. And if you want to be cute, you could kind of maybe trade for that. Maybe, but I mean, here you got a company, the government's thrown billions of dollars that they're clearly lighting on fire. I mean, I just don't see a natural buyer. There's going to be some sort of fire sale. But what that looks what that looks like. I mean, it's sad, obviously, right? American icon, but it's there's just as I think I wrote my note yesterday, there's just no natural buyer for this mess. And who knows what kind of people will evaluate the different parts when that time comes. So, and again, we really don't know why Gelsinger was pushed out. Was it because he couldn't find a buyer for the business? Are fundamentals deteriorating even faster in the core? We know Dell and Hewlett were pretty negative on PC on their recent reports as well, and there was some I won't say hype, but there was some what's the word I'm looking for here? A little bit of a hopefulness that maybe the PC refresh cycle was going to take hold a little bit sooner than later with just the rise of AI PCs, but we're just yet to see that as well. So the story is just sort of a mess. And then again, now you have this stories in flux. They're just going to lose share, whether it's the AMD and the CPU side. They're clearly nowhere in AI. So yeah, who knows? It's sad, but it's again, buyer beware. But like I said, there's nothing to get excited about. And I think again, if the stock breaks out above 25 on a real catalyst, you know what? I think that's when you want to buy it. But right now, buying these tech names on hope, the rallies just continue to be sold on the stories that just aren't very sexy.
So you mentioned, sorry, last question, Joel. You mentioned Oracle, which reports on the 9th. Thank you for putting this on the radar. I just wanted to mention something about, I think between the last time that they reported, which was a very good quarter, and then they came out with this crazy guidance where they went forward like a couple years.
Yeah.
Why would a company do that? Why would they think that they know what's going to happen so many years and increasing their guidance so much from that point? That's rare that you hear that.
Yeah, and especially because it's not like investors are demanding that type of visibility as well. I'll be honest with you. I think I was literally, I think when Oracle reported was my first day back in the seat at Wedbush, having my garden leave over the summer. So I'd be lying if I was all over that. Yeah, I mean, now it just kind of, it sets the expectation bars a lot higher moving forward in case there's any hiccups. They're going to have to answer if that ever has to be reset. So yeah, that doesn't bode well. And I mean, it just doesn't make any sense from a management team to do that. But with Oracle, I mean, the checks remain solid. And the focus on the quarter is just continued top line acceleration. And their guidance does support double-digit, fiscal year 25 growth targets. So Oracle's just another one of those stories where it was somewhat lit. It was early to the AI party, and I know a lot of startups were using Oracle. I want to say like February 22, but again, investors hated the stock for a decade plus, right? Think about IBM. And so obviously it's getting a lot more AI credit now than it did 18 months ago, or even 12 months ago for that matter. But yeah, I mean, I like the story. Again, there's been positive VAR checks, just, there's no indications that momentum's slowing. And again, that's why I still focus on Salesforce, Oracle, ServiceNow. Don't try to buy these stories that have been stuck in the mud, spinning their tires like Adobe and Microsoft. Like I think there'll be a time to buy Microsoft, but at least in the near term, hedge funds are going to use it as a funding short. And maybe I think people will warm up to the story closer to the Azure is expected to reaccelerate in the second half of 25. So you'll start seeing people revisit Microsoft, but in the near term, it's just kind of spinning its tires a little bit.
Christian, were you gonna hop?
No, he just did. So we've got some breaking news. We're gonna let Joel go. Wrap up.
We got all right.
We got some major breaking news.
We got breaking news. All right, Joel Kulina, tech, media, and telecom over at Wedbush. We're gonna be dialing you up again real soon. Thanks, Joel.
That was great, guys. Thanks.
Thank you, Joel.
All right, what do we got, Dennis?
Christian's got it. UNH.
Yeah, I mean, I just saw this just hit the tape. I don't know anything behind it, but it says that the CEO has been
UNH CEO.
fatally shot. So
Oh,
The UNH has
horrible
tanked
news.
$15 on this. It's bouncing back here now, but there are reports that the UNH CEO has been shot and killed. Brian Thompson, fatally shot in Midtown here. Wow. That's crazy news here. UNH is full of news here today as well, actually, because UNH last night came out with an update. And the stock initially popped substantially on that update. And if you show the chart, Joel, we got to 630 last night,
crazy.
just under $630 last night. And then literally gave it all back. So again, the news algos like UNH guidance up, and they're buy. And then they pulled the rug from it. Stock traded down. It's been trading down. Now, obviously, we get this news breaking, which we don't have confirmation, but I'm also getting it on other, news systems here as well. That UNH is indeed the CEO has been fatally shot here. So stock is trading down just slightly on that news as well. Obviously, terrible news to hear. Something like this happening. You never want to hear about people getting shot, but I don't even know what to say on the technicals now because you've got so much news all over the stock. Stock guidance was higher. They bought it up, then they gave it all back. Then the stock's trading down. Now it just traded down to 590 on this, and now it's actually went green. So I have no idea why it's going green now that the CEO's gone. This is unbelievable.
Yeah, I have absolutely no comment on this one. So, but let's move on
Remember,
here.
it's the number one component in the XLV, I believe. So if you were trading the healthcare sector, I'll just bring up the component, but I think UNH and the XLV, I'm just getting the percentage for you, is well, it may not be number one, but it's near the top. It's 8.76%. Eli Lilly is actually number one. UNH is number two. So it's almost 9% of the XLV. So if you're trading the XLV and you're wondering why that's bouncing around, don't look any further than UNH, which is crazy moves here this morning.
Okay, so we got a couple other. We got a secondary. When stocks have big moves, right? What do the companies want to do? They want to raise money here. And Intuitive Machines, after a nice rally, doing a secondary here, trading down $2.63 here. So LUNR under pressure. Do we have any pricing on this yet, Dennis?
No, I haven't seen the pricing go by. Christian, you could check it as well. Sometimes that pricing does break in the morning, but often it's the next day. So what we have with
I think it's 10.50.
Oh, it is. It is priced $10.50. So way down. Now again, people saying, "Oh man, I didn't see this coming." I mean, we talked about stuff like this. When you have it's obvious with biotech, but when you have mission to the moon, it costs money to get there. So they got to raise cash. They're going to need to continuously raise cash to obviously fund these missions. Think about SpaceX, how much money they had to raise and borrowing and figuring out, trying to get the rockets to launch. So you're trying to get to the moon. Again, it costs money to get there. So when the stock pops substantially, which is what we have obviously seen on Lunar, the company uses it as a tool to raise more equity. With that being said, I mean, it's $16 2 days ago. Now it's $11. I think 10 to 10.50 maybe creates a floor. You got to look at timelines here. I haven't looked. I have a very small position left in Lunar. I sold most of it there. I actually had a little piece, and I sold 3 days ago too when I was getting back up over 16. I've been worrying about a potential offering here because with the mission coming up next year, early, I believe it's in the first quarter, they're going to need more money. So now that they are selling and they're raising, it looks like $110 million here, so it's substantial. Maybe that's enough, that for a while here. So maybe that creates a floor around that $10 area. I think I might be a buyer in that, $10, $50 to
Dennis,
$11 area.
Question for you. And for you, Joel, as well. I mean, that's a pretty significant discount to price.
Big time.
Do you ever look at that in terms of, say, like, okay, and it's obviously for bigger companies. This is a small company, so that's why, and the floor
that is
big. But do you ever look at, say, like, oh, they're going to have a secondary, and like, oh, it's only like $1 down versus $10.50? That's only $5 down from price.
30% lower than where it was 2 days ago.
What
Yeah,
about, yeah,
definitely.
I
And
was,
you hit the nail on the head. If you've got a secondary from a major company, they don't have to go down as deep, but you've got to find buyers for something that's like lunar. I'm gonna, loan you money to go to the moon. I'm like, I'm not sure about that. So that's why it's the deep discount that it is. It's what are they doing it for? These are obviously highly speculative missions as well. We know they have the contract, the potential contract with NASA. It's all milestones they have to hit. And I still like the stock, and the story was fantastic. And obviously, we had a great trade on it from $8 to like $14. But at that point in time, it was time to ring the register. I think at a certain point in time, you're looking at getting back in this though. So chat, you guys can help me out, with the mission timelines here. I believe it's supposed to be in the first quarter that they're looking, to obviously, get ready to go back to the moon here. So this is obviously financing for that. So I don't think it's necessarily a bad thing. It sucks if you're long at a 15 or 16 and you're like, oh, way down at 1050. But maybe this gives you an opportunity to get back in this name, for next year. Again, we're a little ways away from that mission though, so you don't want to be too early.
You know what I find interesting is that it's trading a buck above that offering price. So what that tells me is that people that got jammed short in this the last couple days that are not going to be getting a look at that, offering at 1050, they're saying, hey, this this is a gift. This is a gift. We're already back here under $12. So obviously, you want to use 1053 is the level, but to me, I think it's interesting that it's still trading a buck above that. Final stock that we're going to cover here, unless we want to do some ticker time. Roku, we didn't talk much about upgrades, but it's trading, maintained a buy rating on the stock, bumping the price target to $100. I'll let you guys talk Roku.
Yeah, but in that note, so it's the Needham note. And if we go and dig into the note, sometimes you got to go further than just the headline. Needham says the company is likely to be acquired in 2025. So it's not a matter of like why they go the note, oh, they like the earnings, oh, they like this. No, they think it's a target. So that gets people excited. When you see, again, I trade ratings all the time, and we can teach this kind of stuff. I value, Roku upgrades probably worth 2-3% depending on who it's coming from. Maybe it's worth more. This one's worth even more because the reasoning behind, and again, it's not even an upgrade, it's just a note. But when you have a major analyst like Needham talking about, this being a target, all of a sudden it's like, woo, Roku. It gets people excited. And that's, just going to, and obviously, the stock was up a couple days ago here too. I'm not sure why it was up a couple days ago, but, big move here. Maybe it was an upgrade then too. But when you talk about, a stock being a potential target to be acquired, the stock's going to pop significantly.
Yeah, well, last time we had that was back, I believe, during the Olympics, maybe in 20, and Comcast was going to buy it, and that turned out to be one hell of a selling opportunity. Okay, folks, 9:03 here on Wednesday, covered a lot of stocks. Tomorrow, it's Thursday. We'll be bringing Jim Tassoni on. He'll be updating
Oh,
us
nice.
on his swing trades. And I look at that NVIDIA chart, and I remember him going short into the report and where he had his stop, and they probably got him. I wonder if he had the gumption to get back into it. But great show today, guys. Crowd, thanks. Chat, thanks for really contributing, making this show what it is. Christian, thank you, and we'll be back with you guys tomorrow morning.